Korea's KOSPI index swung sharply this week, rattled by rising tensions in the Middle East and the sliding global semiconductor shares, with trading volatile enough to trigger both buy and sell sidecars. For more, we're joined today by Park Min-jung, professor at the Department of Business Administration at Kumoh National Institute of Technology. Hello, Professor. Thank you for joining us.
Hello. Thank you for having me today.
So, Professor, the KOSPI has become one of the world's most volatile major stock benchmarks, with some analysts even saying that the KOSPI is now even more volatile than Bitcoin. So what's driving these fluctuations, and what should investors be watching most closely?
Yeah, the recent surge in KOSPI volatility is being driven by a combination of global and domestic factors rather than a single issue. Markets are reacting to changing expectations for U.S. interest rates, rapid shifts in AI-related semiconductor sentiment, and ongoing geopolitical uncertainty. At the same time, foreign capital has been moving in and out of the Korean market quite aggressively, amplifying short-term price swings. Another important factor is the structure of the Korean stock market itself. The KOSPI is heavily concentrated in large semiconductor companies such as Samsung Electronics and SK Hynix. As a result, changes in investor sentiment toward the AI sector can have an outsized impact on the overall index. For investors, the key indicators to watch are the direction of U.S. monetary policy, and the sustainability of AI investment and foreign investment flows. Short-term volatility can be uncomfortable, but over the long term, corporate earnings and industrial competitiveness remain the most important drivers of market performance.
Right, and President Lee also ordered officials to come up with measures to address concerns over single stock leveraged ETFs. So what do you think would be the most effective regulatory response?
The leveraged ETFs provide investors with opportunities for higher returns, but they also magnify losses. Because of that, investor protection should be the primary focus of regulatory response. Rather than restricting these products outright, regulators should ensure that investors truly and fully understand these risks involved. Measures such as stronger sustainability assessments and mandatory risk disclosures before first-time procedures and purchases and enhanced investor education would likely be more effective than blanket restrictions. And also another issue is the many retail investors misunderstood leveraged ETFs as long-term investment products, even though they are primarily designed for short-term trading due to daily leverage costs.
Right, and the heads of Samsung Electronics, SK Group and Naver are actually expected to meet Nvidia CEO Jensen Huang soon. What do you think this tells us about South Korea's position in the global AI market, and what opportunities could emerge from closer cooperation with Nvidia?
The expected meetings between the leaders of Samsung Electronics, SK Groups, and Navers and the Jensen Huang is highlight South Korea's strategies importance in the global AI ecosystems. Today, AI competitiveness is no longer determined solely by AI models. It depends on the entire ecosystem that includes advanced semiconductors, high bandwidth memory and cloud infrastructure, data centers, and AI applications. South Korea has a globally competitive position in memory semiconductors, making it as a natural and valuable partner for Nvidia. And also closer cooperation could extend beyond the chip supply into joint development of next generation AI hardware, expansion of AI infrastructure, and also broader collaboration on AI services and data centers.
Right, and Professor, to lead on from what you said, S&P Global Ratings recently upgraded Samsung Electronics' rating outlook from stable to positive. It says Samsung is likely to be the biggest beneficiary of the ongoing memory supply shortage. Now, do you expect the AI-driven semiconductor boom to continue?
I believe the AI-driven semiconductor boom has stronger long-term fundamentals rather than being a short-lived cycle. Demand for AI computing continues to expand beyond generative AI into areas such as AI agents, autonomous vehicles, robotics, and industrial automation, cloud infrastructure. All of these applications require increasingly powerful chips and advanced memory technologies. That said, it means investors should distinguish between long-term industry growth and short-term market expectations. In these cases, optimism about AI has already been priced into stock valuations, which could lead to periods of increased volatility. So overall, I expect the AI semiconductor market to continue growing, but performance will become more differentiated.
All right, thank you very much for your insight, Professor. We appreciate it.
Thank you.